Good morning, everyone. This is a live daily market outlook from Windsor Brokers for Friday, 12th of April 2013. We're at the end of another week with literally no significant changes seen in the markets as most of the instruments against yen hold a positive tone. This is due to the last week's strong Bank of Japan's action that was basically confirmed by the market movements and the overnight comments by Bank of Japan's Governor Kuroda released during the night. The Bank of Japan has taken all necessary steps to meet its 2% inflation target in 2 years, and will try to minimize the market disruption from the massive bond buying. This was the comment from Governor Haruhiko Kuroda during the Asian session. He conceded that some people doubted the Bank of Japan could meet its inflation goal and said unexpected events could mean it would take longer than planned, but said the Bank of Japan would maintain its new policy framework for as long as needed. The Bank of Japan's actions stunned the global financial markets last week, promising to inject about 1.4 trillion US dollars into the economy in less than 2 years by buying government debt and risk assets. Governor Kuroda acknowledged the scale of purchases so large that it could affect bond market, but was confident the Bank of Japan would smoothly buy the debt if the debt it needs. Bank of Japan will also monitor consumer spending, capital expenditure, and export to gauge the impact of its policy and make adjustment when needed. This is the highlight basically of the Asian session releases, as the market stayed rather quiet and not showing any significant movements at the beginning of Friday, but still a lot of significant things we have to highlight regarding the major currencies and the commodities. Before this, we're going to take a look first at the today's calendar before we move into the technicals. As Euro seems to be losing ground at the beginning of European session after breaking below 131 handle, while dollar is gaining ground, and the gold as immediate reaction is pushing lower as a part of its near-term weakness that again threatens possible extension down towards the critical support and multi-year range floor at 1520 zone. From today's events, we're going to take a brief look there. Bank of Japan, Kuroda already had a speech. Wholesale price index from Germany came at rather disappointing -0.2% in March compared to the forecast of 0.3% and the 0.1% seen in February. Industrial production from Eurozone is due at 9 o'clock GMT February release, forecasted at 0.3% in the positive territory compared to the pullback in January that resulted in -0.4% release. Leading index from UK is due at 9 o'clock for March. We have no forecast. 0.4% was the previous release, and then we have a batch of data from United States. Retail sales and producer price index due at 12:30 GMT March release for retail sales is expected to stay at 0 compared to 1.1% increase in February, while core retail sales are expected to pull back by -0.1% compared to 1% growth in the month of February. Producer price index for March is also forecasted negative, -0.2% is today's consensus compared to +0.7% in the February's release, and the core PPI for March 0.2% forecast unchanged from the previous release. A couple of speakers. FOMC member Rosa Green is due at 12:45. More significant is Fed's chief Bernanke speech that is due at 16:30. And before this, we have usual releases for once a month Friday in the University of Michigan. Inflation expectations and consumer sentiment for month of April are due at 13.55. Consumer sentiment is expected, according to the forecast, to show improvement to 79.1. That is today's consensus, compared to 78.6 in month of March. While business inventories from the United States due at 1400 GMT for February are forecasted at 0.4% versus 1% in the month of January, and that's all for Friday. More focus again is seen on the United States, as Europe has no many releases forecasted for today. So we're going to take a look at the technicals and see the latest movements in the market and expectations for Friday. As said, most of the instruments remain steady at their highest or lowest levels. We can see that euro is easing off a fresh high posted yesterday at 131.37. Loss of 131 handle now is quite significant. Reversing hourly indicators are signaling that possible further easing is quite likely. On the 4-hour chart, again, reversing indicators from the overbought territory see potential for some more significant corrective action. Most likely it will look like profit taking at the end of the week. Still, we have quite significant levels and barriers at this point, and seen as pivotal points in order to be cleared to resume the current recovery of double bottom posted at 127.50 zone at the end of March. Basically, we reached our initial target at 131.06 and the 131.13, the 38.2% Fibonacci retracement. However, significant thing is that the pair failed to close above this level as initial barrier, and then again we have 131.61, which is the high of 28th of February, and the bearish crossover of 55 over 90 days moving averages. They're around the 131.40-60 area, and this zone is seen as a breakpoint for the pair to confirm the bottom at 127.50 and the open way for a further retracement of the larger 137.10 to 127.50 down leg. When we'll be looking for a test on a break, of course, for a test of 132 as round figure and 132.37, pardon, 132.27, 50% retracement. As the current easing threatens the lower boundaries and initial supports, we are looking for a first support at 130.42. That's the low of yesterday, ahead of 130.00 round the figure support. 130.42 also marks 23.6% Fibonacci retracement, with immediate support, dynamic support 20 days moving average now being under pressure, below which we have 130.42 as said, and then another significant 130.00 zone where is psychological round figure support, as well as near 38.2% retracement of the rally from 127.44 to 131.37, reinforced by ascending 55 days exponential moving average, basically holding above this level. That any dips will be contained here is seen as ideal reversal point for a possible fresh extension higher. Reminder that the euro is still in the downtrend, as a larger picture still shows the price holding below 38.2% retracement. We need to see the clear break above our previously mentioned pivotal point in order to resume recovery and open next upside targets. Conversely, as we set the break below 130.00, 129.87, and another one at 129.40, 50% retracement could see a sideline immediate bulls and open way for a deeper reversal. Cable, similar to euro, holds a positive tone. It's currently easing off recent peaks when the pair probed the levels above 154.00, 154.10 seen so far. The pair remains bid at this point and still sees the upside firmly in focus as we reached levels just ahead of our next upside target, Fibonacci 38.2% retracement of 163.80 to 148.30, descend at 154.22, and the break here is to spark fresh gains, fresh recovery as a part of the recovery rally from 148.30. That so far peaked at 154.10. Daily structure is positive and supportive for further extension. Now on the hourly, reversing indicators on the hourly chart suggest that we may face some more significant pullback. The pair dipped at the beginning of European session briefly below 154 handle. Still initial support, previous resistance at 153.60 still intact. This is initial one, reinforced by 153.42 ascending at 20 days exponential moving average, and then we have 153 as a round figure support, and also near the low of 10th of April, while 152.60-70 zone is offering quite good support. It's 38.2% retracement and ascending 55 days exponential moving average, along with the previous two peaks at 152.60 of 2nd of April and 25th of March. Basically, break below 152.60 could be seen as a trigger for some more significant pullback. Until then, the bulls remain well positioned for a final push through 154, 154.22, our next target. With the weekly close, of course, will be playing significant role. We will see if the pair closes above 154, then this will be quite good indication for some stronger extension, stronger extension of the recovery from 148.30 low. Dollar yen continues to flirt with psychological 100 barrier. The latest extension seen yesterday reached 99.93, so we are just ticks away from this significant resistance. However, as we mentioned in the previous sessions, a further hesitation is still seen on the table, as the pair is the price action is still shy of 100 level, and comes closer but does not break it. Current easing seen at the during the Asian session and the beginning of European session now threatens initial support at 99 zone. This is a near-term range floor also, a break of which could be initial signal for some stronger pullback, stronger corrective action of the recent rally sparked on the last week's Bank of Japan's action, when the price rallied from 92.70 low of 3rd of April, peaking at 99.93 so far. 99 zone is also 20 days exponential moving average, while another very significant support is 98.00. This is the weekly low of the past week, and the break here could delay immediate bulls and open way for some more significant pullback, where we'll be looking for test of the previous highs at 96.70, and then of 97.50, which is 55 days exponential moving average, and the 97.17, 38.2% Fibonacci retracement ahead of 96.70 previous high, and then 96.30, 50% retracement. Holding above 98, I would say, as good support will still keep the upside focused, and the clear break above 100 level is set to look for test of 101 and then 101.40, which is a high of April 2010. From the other majors, Aussie dollar made a fresh step higher yesterday and hit a fresh high at 105.81, approaching its near-term target and the key barrier zone at 106.00. This is also the top of the range established since August 2012, and the pair seems to be on a good way to clear this barrier and open way for fresh bull phase, as the price action has been entrenched between 101.14 on the downside and 106 on the upside in past several months, basically since August 2012, and the break here is to open upper targets at 107.50, 108, and then 108.55. Hourly structure shows the easing of the indicators. As we can see, they are all in the descending mode of the recent peak at 105.81. If we take a look at Fibonacci levels, the current dip so far tests 105.26. That is 23.6% retracement, and it's reinforced by hourly 55 days exponential moving average, while the more significant support zone lies at 105 area, where we have 38.2% Fibonacci retracement of the upleg from 103.50 to 105.81, and this is also the low of yesterday at 104.99. Basically, break below 105 will be a signal of some stronger corrective action that will precede the fresh bulls. As overall picture is still holding a quite positive tone despite quite extended conditions of the 4-hour indicators. The upside is still focused, and we will be looking for a possible test of 106 in the near term, as long as the price action holds somewhere above 104.40.50. That is approximately midpoint of the recent upleg, and the price is also boosted by bullish crossover of 20 over 55 days exponential moving average that currently that occurred at 104.25. As long as we hold above 104.50.60, the immediate focus lies at the upside targets. Of course, initial and strong support stands at 105, and ideally should contain any corrective dips. From the other side, commodities remain under pressure, especially gold, that showed no significant strength to recover recent losses that dipped from the peak of 1590 down to 1553. This is the low of yesterday, with the upside action being limited at 1570, our initial resistance, and still seeing more potential towards the downside at this point. 1570 marks the previous lows, as well as approximately 50% retracement of the recent fall, and break above this level is seen as a trigger for some stronger recovery that will basically avert immediate downside risk. According to the near-term structure in the hourly indicators are still quite negative, as MACD holds in the negative territory, and the evident lack of bullish momentum still keeps the downside vulnerable. We have initial support at 1553 and then 1550, break of which to expose the recent low of 1539 posted on the 4th of April, and possibly to see fresh bearish extension down towards a critical multi-year low at critical support and multi-year low at 1520 zone. On the 4-hour chart, negative tone is confirmed by negatively aligned indicators, and the price action being limited by descending 55 days exponential moving average currently at 1566, and above this part, this is 20 days, 55 days one is at 1573, just above our break point. So break above 1570 is expected to trigger fresh gains, and basically to confirm the higher low at 1553 for a possible return up towards 1590, our recent high posted on 9th of April. Conversely, loss of 1553 is to open 1539 and then 1520-26 critical support zone. Finally, the crude oil that lost traction after hitting a fresh high at 94.78 2 days ago. We commented yesterday that a positive tone will remain in play as long as support at 93.40 holds. This is low of 10th of April, as well as 50% Fibonacci retracement. Unfortunately, a sharp reversal seen yesterday continues today as the price dips now below 93, which is the psychological support. Also marks 61.8% Fibonacci retracement of the latest rally from 91.93 to 94.78. Immediate focus is shifted towards the downside as hourly indicators are well into the negative territory. On the 4-hour chart, loss of bullish momentum and traction is seen on the recent pullback as indicators are now attempting below their midlines, and the price already moved below both 20 and 55 days moving averages. That keeps increased downside, that increased pressure, and basically break below 191.93, which is the low of 5th of April, is also to complete head and shoulders like formation seen on the 4-hour chart with the headline, with the neckline seen approximately at 91.90-92.00 zone. That may open way for a further more significant easing. I think it's better seen on the daily chart where the neckline stands exactly at approximately 91.90. Initial support, we have a main trend line, bull trend line support at 92.58, and then we have the very strong support at 91.90, reinforced by 200 days moving average currently at 91.84. To avert immediate downside risk, the oil price needs to break above 94.78, 95.00 to possibly refocus the upper targets. The recent peak of 1st of April at 97.68 will be seen as the next short-term target in case of break higher. For now, quite a negative tone that is seen on the lower and the larger time frames, also as the daily indicators are about to break in the negative territory, sees increased downside risk and the possibility of further easing that will complete the head and shoulders pattern shown on the 4-hour and daily chart, and possibly open way down towards the key support at 89.35, low of beginning of March 2013. Also, the significant to mention is the 91.90 zone. We set its double bottom. It's a 200 days moving average. It's also 61.8% Fibonacci expansion of the wave, down wave from 97.68. So quite a negative tone seen for the crude oil according to the technicals. And that was all for today from me for Friday. What we have 12th April 2013. If we have any questions now, I think we have already. When the webinar starts, it started and it's finished already. Quick look at dollar yen we already covered, so we're going to take a quick look at the silver. This is a request of one of the attendees. If we take a look at the daily, then we can see that the bearish structure remains intact as the price is in the down move from a recent peak of 32.25 and 32.46. This is the annual peak posted on 23rd of January 2013, with the brief corrective action of recent low at 26.62 being capped at 28.07, just ahead of the trend line resistance. Now to the near-term structure. 4-hour indicators are losing traction as the reversal from 28.07 dipped to 27.39, just ahead of 50% retracement, where the temporary support was found, but the price action is still stuck somewhere around 20 and 55 days moving averages, slightly aligned towards the downside as most of indicators are still pointing lower, and RSI is already below its 7 days moving average. Hourly structure is at this point neutral to negative, with immediate support at 27.41 and the resistance at 27.84, and basically break of either side is set to show the next direction. However, a negative tone and lack of momentum seen, building up basically bearish momentum, sees more risk towards the downside. 2741, 2720, 2700 seen as the next downside target. Since we don't have more questions in this case, I'm going to conclude today's session, and just would like to invite you for Monday's session that is due at the same time at 10 o'clock GMT, 10 o'clock local Cyprus time, pardon, 7 o'clock GMT. Keep an eye as well. Today's Friday, so we might have some profit taking and the stronger movements in the markets. Wish you a nice Friday, good and successful trading, and a good and relaxing weekend, and expect to see you back on Monday. Good luck.